Hello everyone, let's start our today's discussion. I hope you all remember that in our previous classes, we were having discussion on June 2025 attempt exam paper for Advanced Taxation exam. In our today's class, we will be moving forward in our discussion and we will be discussing this question number 3, which is the last question of this exam paper. In this series of past paper discussion sessions, we are discussing these complete exam papers and we will be covering around 7 complete attempt exam papers. These past paper discussion sessions are really important for you guys in your last phases of exam preparation. It gives you an idea that how you have to deal with all of the topics together in your examination in a time restricted situation. See, when you talk about an exam like advanced taxation, where there are a lot of small concepts which need to be covered, topical practice of past papers do not give you the complete preparation because you study that small topic and you do the past paper of that topic only. So the topics are fresh in your mind and the topical past papers appear to be easy. But when you do these complete past exam papers where all of the topics come together, and when you talk about this advanced taxation where topics get connected with each other, the real difficulty starts at that time. So these complete exam papers will give you an idea of the exam situation and the problems which you may be facing there. So that's why these past paper discussion sessions are really important for your exam preparation. And we are covering these past exam papers of around 7 complete attempts in our series of past paper discussion sessions. And then I will be giving 3 mock exams to my students, which they have to attempt on their own and send me for marking and feedback. So this is a very detailed approach and this has been very successful, and due to this only more than 50 of my students have secured nationwide positions in this exam of advanced taxation. Okay, so let's start with this exam paper. We'll be going in detail. We'll be reading this introduction, then we'll be looking at this exhibit, the requirements tab, and then at last we'll be actually drafting the whole answer in our today's class. So your patience and concentration throughout the class will be really essential as it will be a detailed session because we'll be drafting the whole answer. So you need to listen carefully. Let's start. You should assume that today's date is 1st April 2025. Adele and Chitka have requested advice in respect of the reduction of their combined income tax liability following the transfer of an income producing asset. See, now when you are reading the question for the first time, it's very important that you read with patience. Don't rush. Now students will get confused. Sir, what is income producing asset? We have not looked at this term in our course study. What is this thing coming? They will start to feel pressurized. See, relaxed. You haven't read the scenario. Believe me, it's very easy. Income producing asset can be any rental income property. It can be any shares of the company. So any asset which was generating income. Now, how it will be transferred? What is the scenario? When we look at it, it will be very easy. See, I always say that whatever you have studied during the entire session, that's 50%. Remaining 50% is your approach and a method that how you deal with the exam situation. You shouldn't be start to feeling stressed or frustrated, or you shouldn't be rushing out. Otherwise, you will do the mistake. Okay, so just read the introduction, go with patience. The availability of gift holdover relief on a gift of shares and the consequences of making such a claim, and the availability of business property relief and the maximum possible inheritance tax liability which may arise on the gift of the shares. The following exhibits available on the left hand side of the screen provides information relevant to the question. There is only one exhibit, Adel and Sikka. The information should be answered to you. Answer the question within your chosen response option. There are 2 response options. One is word processor and other is a spreadsheet. In our today's class only, when we'll be actually drafting the answer, you will also get a guide that how you have to use these response options. Okay, so don't worry about it. Everything will be covered in detail as we move forward. So let's look at this exhibit number 1, Adel and Sikka. Okay, let's look at it. I want you all to listen to me very carefully. Now, Now, as we start to read this exhibit, Adil and Sitka are not married but have lived together for many years. Now, when they are not married, they will not be getting a lot of reliefs relating to spouse exemptions, like in CGT, inheritance tax, when the assets are transferred between husband and wife, between spouses. They are exempted from CGT and IHT. But here he has made it clear that they are not married. Adel and Sitka are both tax residents and domiciled in the UK. Adel. Adel will have a total income in the tax year 2025-26 prior making any gift to Sitka as follows. Now, Adel's income details are given. He has trading income of £55,000, rental income from a UK investment property of £15,000, dividend income from Bovac Limited £12,000, and dividend income from other companies £8,000. So Adil is having a yearly income of £90,000. Okay. See, just read the question with patience. Don't do overthinking. Just go with patience. Okay. Adil will gift either his UK investment property or his entire shareholding in Bovac Limited to Sitka on 6th April 2025. So now either Adil will give this rental income property on which he is getting 15,000 rent, or he will give this dividend income shares of Bovac Limited which are generating dividend of £12,000. He will give either of the income producing asset. Do you remember the word income producing asset? This UK investment property is also generating income of rental, and shareholding in Bovac Limited is generating dividend. Has made one previous lifetime gift to his daughter on 1st July 2022, which resulted in gross chargeable transfer of 108,000. Okay, let's move forward. Sitka. Sitka will have income from employment of £14,000 in the year 25-26, which will be her only source of taxable income in this year. Sitka will retire from employment on 1st March 27, will sell the asset received from Adil on 1st March 27 when it is anticipated to have increased in the value. Okay, so once Sitka will get this investment property or the shareholding in Bovac Limited, she will sell it on 1st March 27. Fair enough. Let's read it. Just read, identify the data. We will look at the requirements and we will do the detailed drafting. Adil's shareholding in Bovac Limited. Adil acquired 10,000 ordinary shares in Bovac Limited for £386,000. The market value of these 10,000 shares on 6th April 2025 will be 404,000. So whenever you are gifting anything from capital gain tax purpose, it is treated as a disposal at market value. Okay. Bovac Limited is a UK resident unquoted trading company, owns assets which will have a total value of £4.5 million on 6th April 2025. These assets comprise trading assets valued at £4.1 million, of which 3.8 million will represent chargeable assets for CGT purpose. Because there are exempt assets also for CGT, like cash is exempt, receivables are exempt. Shares in quoted company valued at £0.4 million held as a long-term investment. So it is a non-business asset. What we call as a non-business asset or an accepted asset. If Bovac Limited has also done further investment, so it is like Bovac Limited is holding accepted assets from IHT perspective, and from CGT perspective we call it as non-business assets because these are the investments done by the company itself. Obviously, we'll be looking at all of the detail once we go forward in the requirements. So this is the entire detail. Income details about Adil. Okay. Income details about Sitka. Valuation of the shares and valuation details about the shares, and okay, the valuation details about investment property are not available. Only the details about the share valuation is given. So that's the entire exhibit which is provided to us. Now let's look at the requirement tab and see what he's asking. Requirement for 25 marks, the entire tab, if you look at it, you should assume that today's date is 1st April 2025. Part A. Calculate with supporting explanation which of the two potential gifts from Adel to Sitka will produce the greater net annual income tax saving for the couple. 5 marks. Just think about it. Adel is a higher rate taxpayer if you look at it. Adel's incomes go up to £90,000. Whereas Sitka is a basic rate taxpayer, her only income is £14,000. So if Adel gives this rental income property, or if he gives this dividend income property of Bovac Limited, what he's asking, calculate with supporting explanation which of the two potential gifts from Adel to Sitka will produce greater net annual income tax saving for the couple. Believe me, a very easy requirement. You just need to listen to me carefully. Okay, so what I will do is I will copy this requirement from here. I will open the word processor document. See, it's very important that you listen to me carefully. Okay, the name of the question is Adel and Sitka. Okay, and we are dealing with this requirement 1. Okay, I have pasted this requirement here. See, since it is question number 3, okay, just listen to me. In section B, question 2 and 3, you don't have communication skill marks. Communication skill marks are in question number 1 only. Please listen to me carefully. Communication skill marks are in question number 1 only, which is the section A. So you have to make the format of email or memo, whatever he is asking. But in question 2 and 3, there are marks for analysis, evaluation, skepticism, and commercial acumen. Now, we have already studied these professional skills. So I hope you guys know. But still, if I give a slight reference, analysis, analyzing the text rules, looking at the situation from a very much detailed financial and non-financial analysis, how well you analyze the data. Evaluation, favor and against, evaluate the thing. We say in this word now that please evaluate it, like take a decision, evaluative perspective. Skepticism, question the data if there is any incompleteness. Commercial acumen, a business sense, like here you are advising that, okay, which will produce the lower income tax. It's not necessary that in every requirement you will apply all professional skills. You do your answer in a normal way, but please ensure that while dealing it, you analyze the rules properly, you evaluate the scenario, your commercial acumen is reflected, because you will be attempting 20 marks requirement, 5 plus 2, 7, plus 4, 11, and plus 9, 20. You will be answering 20 marks. 5 marks are additional, those are a gift for you. If while attempting these 20 marks, you ensure the professional skills. You analyze good, you reflect your commercial acumen, you show your evaluative skill, okay, all of these things. Now let's corely focus on this requirement. Believe me, it's very easy. Calculate with supporting explanation which of the two potential gifts from Adel to Sitka will produce the greater annual income tax saving for the couple. Now just think about it. If UK investment property is gifted. Just think about it. There were two situations. Either you will give UK investment property or you will give entire shareholding in Bovac Limited. So let's think about this UK investment property. If UK investment property is gifted, then rental income of £15,000 will shift from Adel to Sitka. This £15,000 rental income which was on Adel will shift to Sitka. So what will be the tax saving? Just think about it. Adel is a higher rate taxpayer. Okay, his income is reaching £90,000. So on this £15,000, Adel's income tax will reduce by the 40% is the tax rate. 6,000 will be the tax saving for Adel. And when it will go to the packet of Sitka, she is a basic rate taxpayer. Her employment income is £14,000. Okay, so on Sitka, the tax will be at 20%. So the difference will be the net tax saving. Just listen to me that how I deal with it. Okay, I want you all to listen to me carefully while I deal with it. Okay, so now we'll copy this pound sign. Okay, you can use the symbol button also to add it. You can use Control C and Control V also. Sometimes in the examination, Control C for copy and Control V for paste. That is working. Some students say that it do not work. Then in that case, you will copy and from here you will have to paste every time. You can use symbol also to add the pound sign. Okay. If you don't have time and if you don't add any currency symbol, that is also acceptable. If UK investment property is gifted, then yearly rental income of £15,000 will shift from ADL to Sitka. Okay, this will generate income tax saving or income tax reduction for ADL of £15,000 multiplied by 40%, which will be £6,000. Okay, Adil is a higher rate taxpayer, therefore his rate of tax on rental income was 40%. Okay, Sitka will have to pay income tax on this rental income at 20% rate, as she is a basic rate taxpayer. Okay, this will create income tax of £15,000 multiplied by 20%, which is £3,000. Net income tax reduction for the couple in this situation will be £6,000 minus £3,000 is equal to £3,000. Okay, I believe if anyone feels that it is difficult, he literally need to rethink that whether he is in advanced tax or not. It was a very simple one. If you give UK investment property, this 15,000 rental income will shift from ADL to Sitka. Okay, now let's talk about the shares of BOVAC Limited. If ADL will gift shares of BOVAC Limited to Sitka, then in that case, yearly dividend income of how much? Then yearly dividend income of £12,000. Then yearly dividend income of £12,000 will shift from ADL to Sitka. Okay. In this case, ADL's income tax liability will reduce by how much? See, ADL will either give this investment property or will give these shares. He is not gifting both of them. So now, since ADL is a higher rate taxpayer and dividends are taxed at the end, okay, so the tax rate on this dividend income was 33.75%. I hope you all remember the tax rates. Okay, will reduce by 33.75%. Okay, the tax rates are also given in the tax rate sheets. So that gives us 4050 pounds. Okay, 4050 pounds. Okay, Sitka's dividend income will increase by £12,000 and her income tax on it will be, now just think about it. See, Sitka do not have any other dividend income. She only have the employment income. So when she will be getting this dividend income of 12,000, on initial 500, she will pay 0% tax and then she will pay basic rate of tax on the dividend income since she is a basic rate taxpayer. For ADL, there was other dividend income also which was using the 0% band. But for Sitka, since there is no other 0% band, okay, there is no other dividend income. So Sitka will get a 0% band on this dividend income also. Let me repeat it again. See, ADL has other dividends also coming. So they will use up the £500 0% band. But for Sitka, since this is the first dividend income which she will be getting in the year, so what will happen is, so income tax on it will be £12,000 minus £500, 0% band. So £11,500 into 8.75%. Just listen with patience. I will repeat each and everything. Okay. So that will give us 1006. Okay. Sitka is a basic rate taxpayer. Therefore, her rate of dividend income tax is lower. And since she do not have any other dividend income, therefore she has 0% band also available of £500. See, I'm explaining it also. Okay, so she has the 0% band also. Now once you are done with this, let's tell about the saving. Okay, income tax reduction for the couple in this case will be 4050 minus 1006. So that gives us a saving of £3043. In this case, the saving was £3,000 and here the saving is £3043. Okay. So from income tax saving purpose, from income tax reduction purpose for the couple, it is better that shares of BOVAC Limited are transferred. As it will save greater income tax. Okay. Sir, can you repeat it again? See, I believe that it was a very easy requirement. It was like a requirement from the first chapter of the course, basic income tax calculation. If we transfer this UK investment property, rental income of 15,000 will get transferred. It was getting taxed here at 40%. And at Sitka, it will be taxed at 20%. Since Sitka is a basic rate tax where she only has employment income of 14 and Adel has a lot of incomes. So it was very simple. On that difference, okay, 40% and 20%, there will be a saving of 20%, which is the difference rate, and 3,000 will be the net saving. Now, if Adel will give shares of BOVAC Limited to Sitka, then in that case, yearly dividend income will shift it. Now, Adel was a higher rate taxpayer. Okay. Adel was a higher rate taxpayer, you all know. Okay. Because Adel has a lot of incomes. Okay. Adel was a higher rate taxpayer. Whereas Sitka was a basic rate taxpayer since she has only one employment income of £14,000. Okay. So, Adel was paying tax at 33.75. Adel's 0% tax was already used against his dividend coming from other companies. If you look at it, dividend income from other companies, he was already having these dividend incomes of 8,000. So Adel's 0% band was already used. But for Sitka, this was the first dividend income she was getting. So £500 of 0% band, 11,500, 8.75%. So Sitka's tax will be 1006. 4050 and 1006. Take the difference, you will get the saving. So from income tax reduction, for the couple, it is better that shares of BOVAC Limited are transferred as it will save greater income tax. I believe it was a very easy requirement. You just need to analyze that how it was being taxed at Adel and how it will be taxed at Sitka. Okay, let's move forward. Part B. On the assumption that Adel gives his shares in BOVAC Limited, explain why gift holdover relief will be available for the purpose of CGT. 2 marks only. So this means a very easy requirement. Let's copy it from here. Okay. Let's copy it from here. Okay. Copy. And now we'll go add word processor and we'll paste it. Okay, so here you go. This is the requirement. So now let's look at it, that how we have to deal with it, that explain why gift holdover relief will be available for the purpose of capital gain tax. You will go at this exhibit number 1 and you will be discussing that why gift holdover relief will be available on it. Okay, let's look at it. Okay, so now we'll be reading in relation to these shareholdings in Bovac Limited. Okay, the reason being is that we have to discuss that why gift holdover relief will be available. So now when we look at the Adil's shareholding in Bovac Limited, Adil acquired 10,000 shares, a 12% shareholding in Bovac Limited on 1st March 2023 for 386,000. The market value of these 10,000 shares will be 404,000. Bovac Limited is a UK resident unquoted trading company. Now, if you remember the gift holdover relief, we have already studied it, and you must have my life-saving summary notes in which I have summarized the entire course in 45 pages. I hope you all have those summary notes. So now if you look at those summary notes and you look at the conditions of gift holdover relief, it is available when we gift our unincorporated business, when we gift shares of unquoted company, when we gift shares of quoted company in which we have at least 5% shareholding. Okay, if you remember all of those conditions. Then when we are gifting an agricultural property asset, or when we are gifting an asset which is immediately chargeable to IHT. Here the Bovac Limited shares are simply unquoted company shares. So yes, it will be eligible for gift holdover relief. And the donee is also UK resident, both are resident in UK. So the question is that why gift holdover relief will be available? So gift holdover relief will be available on gift of shares of Bovac Limited by Adil to Sitka as both of the following conditions are satisfied. Okay, what are the conditions? Number one, shares of Bovac Limited are of an unquoted company, So on unquoted trading company, yes, the gift holdover relief is available. If it would be a quoted company, then also it will be available. But in that case, 5% shareholding would be required. That is also satisfied because he has 12% share ownership. And donee, that is Sitka, is UK resident. Okay. So yes, the gift holdover relief will be available. A very simple 2 marks requirement that why gift holdover relief will be available. So since it is a gift of unquoted company shares and the donee is resident in UK, so gift holdover relief will be available. You can just refer my summary notes. All the conditions are written there. It was a very easy requirement. Simple 2 marks, the conditions of gift holdover. Then explain with supporting calculation the impact of making gift holdover relief on the chargeable gain, which will be realized by both Adel and Sitka. How many marks? 4 marks. Believe me, very easy. Just listen to me carefully and you will understand in the best possible manner. Now, if you remember the gift holdover relief, how that works. When we claim gift holdover relief, the gain is deferred from the donor and it is shifted to the base cost of the donee. When donee will sell that item later on, the gain will become chargeable at that time. Gift holdover relief defers the gain from the donor to the donee. Very easy requirement, just listen to me carefully. What is the value of shares now? It's 404,000 shares value, whereas its purchase value was 386,000. Okay, so let's look at it. Now, on gift of shares from Adel to Sitka, a chargeable gain will arise of how much? 404,000 minus 386,000. See, always remember that for CGT purpose, the assets gifted are treated as transferred at market value. 404,000 minus 386,000. Okay, so it will give rise to a chargeable gain of how much? 404 minus 386. So it will give a chargeable gain of 18,000 pounds. On this chargeable gain, just listen to me carefully. On this chargeable gain, gift holdover relief can be claimed on chargeable business asset portion of Bovac Limited. Okay, because if you remember, Bovac Limited has some investment also in the quoted companies of 0.4 million. Just listen with patience, you will be able to understand. Now, the chargeable assets were 3.8 million, of which 0.4 million were the long-term investments. So now you will prorate the gift holdover relief. Now, gift holdover relief will be of 18,000 pounds multiplied by chargeable business assets, the trading assets, the chargeable business assets were 3.8 million multiplied by 3.8 million divided by 3.8 million plus what are the investment assets? 0.4 million. Just listen to me carefully. You will understand the things. I will repeat it also. 0.4 million. See, 0.4 million were the investments. 18,000 pounds multiplied by, on the numerator keep chargeable business assets 3.8 million. In the denominator total chargeable asset 3.8 plus 0.4. Sir, please repeat. 18,000 pound is the gain. Gain multiplied by the division sign. Chargeable business assets 3.8 million. Chargeable business assets. Because the trading assets were in total 4.1 million, but chargeable for CGT were 3.8 million only. The reason was that in CGT there are exempt assets also, so you ignore that. 18,000 multiplied by chargeable business asset 3.8 divided by chargeable business plus those investments. The investments done by Bovac Limited are of 0.4 million. Okay, so what will be your gift holdover relief? 18,000 multiplied by how much? 3.8 divided by 3.8 plus 0.4. So gift holdover relief will be of 16,286. Remaining chargeable gain will become chargeable now on added. Beta baki jo gain, the remaining gain 18,000 minus 16,286. That will become chargeable now on added. Sir, will you repeat it again? Yes, I will repeat. So there is nothing to worry. So 1714 will become chargeable now on added. So please repeat it again. See, on gift of shares from Adel to Sitka, chargeable gain will arise of 404 minus 386. So a gain will be of 18,000 pounds. Now on this gain, we will be going for gift holdover relief. Okay. Now gift holdover relief will be 18,000 multiplied by 3.8 million were the chargeable business assets. Okay. Divided by 3.8 plus 0.4. You can use your external calculator. Otherwise, the calculator is available here also. But obviously, using external calculator is more comfortable. Remaining chargeable gain will become chargeable now on Adel of 1014. Adel will have to assess capital gain tax on it in year of gift. Okay. See, the question was only on chargeable gain. Obviously, there will be annual exemption also. Then taxable gain will arise. That detail will also arise. But we have to talk about the chargeable gain portion only. So I have used this word assess. While assessing, he will obviously deduct his annual exemption also. Now, gain deferred through gift holdover relief will reduce base cost of these shares for Sitka. Okay. As a result, when Sitka will sell these shares, her lower base cost will increase her future capital gain tax. Okay. Gain deferred through gift holdover relief, which will reduce her base cost, is 16,286 pounds. So 16,286 pounds will be the base cost which will be reduced due to gift holdover relief. Sir, can you explain it again? Yes, it's very easy. On gift of shares from Adil to Sitka, chargeable gain of £18,000 will arise. Okay, 404 minus 386. On this chargeable gain, gift holdover relief can be claimed on chargeable business asset portion. Gift holdover relief will be of £18,000 into 3.8 million, the chargeable business asset, divided by 3.8 plus 0.4, which were the investments. So gift holdover relief will be of £16,286. Remaining chargeable gain will become chargeable now on Adil of 1714. Adil will have to assess capital gain tax on it in year of gift. Now gain deferred through gift holdover relief will reduce base cost of these shares for Sitka. As a result, when Sitka will sell these shares later on, whenever she sell, it was stated that she will sell in 2027. Her lower base cost will increase her future capital gain tax because the gain is getting transferred from Adil to Sitka. Gain deferred through gift holdover relief will reduce her base cost by £16,286, which is the value of gift holdover relief which we claimed. See, I particularly believe that it was a very easy question. One word is easy, another is very easy. Conditions of gift holdover and how the gift holdover relief operates. Okay, now let's move forward. Part C. On the assumption that Adil dies before 6th April 2032, explain the availability of business property relief in respect of the shares in Bovac Limited. So now he's moving towards the IHT implications. Let me copy it from here and we'll paste it here. Believe me, till now this question has been a very easy question. Now, on the assumption that Adil dies before 6th April 2032, first of all, what is the importance of this date? Let's go and look at it. Explain the availability of business property relief in respect of the shares in Bovac Limited. So let's go and look at these shares of Bovac Limited, that when they are planned to be gifted. So they are planned to be gifted on 6th April 2025. Adil will gift either his UK investment property or shareholding in Bovac Limited on 6th April 25. So 6th April 2032 is an important date because 2025 to 2032, it's a 7-year period. Use your mind. From 2025 to 2032, it's a 7-year period. If Adil will die before 6 April 2032, then only there will be IHT implications. If 7 years have passed, then there will be no death tax. And on lifetime gifts, you already know, lifetime gift to an individual, it's a PAT, there is no lifetime tax. So IHT on this gift of shares will only arise if Adil dies before 6th April 32. 6th April 32 is the 7-year period of the gift. So yes, it's a very important thing. Okay. So now, but you need to be very careful that Sitka plans to sell these shares on 1st March 27. So apparently Sitka will not have the holding of these shares till the death of Adil. So for BPR, you all know that it's very important that you have to keep that business asset at least till the death of the donor. So now I want you all to listen to me carefully that how it will work. The question is, explain the availability of business property relief in respect of the gift of shares in Bovac Limited. Gift of shares done by Adil to Sitka will qualify for business property relief at the time of gift on 6th April 2025, because it's 6th April 2025, the gift date. Just listen to me with patience. Believe me, it's very easy. On 6th April 25, as these are shares of unquoted company, and Adil has owned these shares for more than 2 years. For business property relief, the holding period requirement is 2 years. Adil purchased these shares in 2023. So 1st March 23 to 1st March 24 and then 1st March 25. So on 6th April 25, 2 years will be completed. Again, if you don't remember the rules of business property relief, you just need to refer the summary notes. As for more than 2 years, Adel has acquired these shares initially on, what was the date? On 1st March 23. And by 6th April 25, obviously 2 years will be done. On 1st March 23. Okay, just listen to me carefully. Unquoted company shares, yes, they qualify for business property relief. Only requirement is shareholding of 2 years. Now, let's move forward. Business property relief will be available on business use portion assets of Bovac Limited. Okay, business property relief will be of how much? Now just listen to me carefully. See, capital gain tax works on the gain, whereas inheritance tax works on the market value. What was the market value of the shares? The market value of the shares which you are gifting is 404,000. It's very important that you understand these things. In capital gain tax, you calculated the gain. IST don't works on the gain. IST works on the market value. So, will be of 404,000 multiplied by. Now look at the assets. The company has total assets of 4.5 million. 4.1 million are trading assets and 0.4 million are investments. In IST, there is no chargeable asset for CGT purpose. IST works on the total assets. Inheritance tax works on the total assets. So 4.1 million pounds, which are the trading assets, divided by 4.5 million pounds. Okay, I will repeat the things again. There will be some confusions going on in your mind, so don't worry about it. So business property relief will be 368,089. Okay, let me repeat it again. See, first of all, business property relief and IST works on market value. CGT used to work on the gain. So in CGT, we calculated the gain. In CGT, we look at the chargeable business asset. Chargeable. CGT is chargeable concept. In IST, you just pick up the business assets divided by the total assets. Okay. In both of them, the issue is of that 0.4 million only. Okay. But here you are picking chargeable business assets plus that investment. Here you pick the total assets, which obviously include that investment also. And in the numerator, you included your business assets only. Okay, so it was given here 4.1 million were your business assets and 0.4 million was the accepted asset or a non-business asset held by Bovac. So now you have this value of business property relief. Business property relief will be of 368,089. This business property relief will be available at the time of gift. Okay, now if Adel will die before 6th April 2032, then this gift will become chargeable for IST for death tax purpose. Obviously, it will become chargeable for IST for death tax purpose as death will be within 7 years of gift. That is an important thing. Otherwise, gift to an individual is exempt from IST. If Adel will give to an individual during life is exempt from IST, you all know. But only if you die within 7 years, then death tax implications will arise. Okay, so we prove that, okay, IST will be on it. But there is one essential problem. Sitka plans to sell these shares by 1st March 27. Now, if Sitka will sell it before the death of donor and she do not invest it, in alternative business asset, apparently there is no detail for it, then in that case the business property relief will get withdrawn. Okay, Sitka plans to sell these shares by 1st March or on 1st March 2027. If Sitka will sell it before the death of Adel and do not invest it in alternative qualifying business, then business property relief will be withdrawn for death tax purpose. Okay, just try and understand. Okay, this means that if Adele dies after 1st March 2027, which is after proposed sale date of Sitka, then in that case, BPR will be withdrawn, as Sitka will not have ownership of these shares on death of Adele. However, if Adele, now this is a very important comment, maybe some students will get confused in it, but don't worry, I will repeat. However, if Adele dies before 1st March 27, then BPR will not get withdrawn, as in that case, Sitka will have ownership of shares on Adele's death. Sir, can you please repeat it again? Yes, I will repeat. There is nothing to worry. Explain about the availability of business property relief in respect of the gift of shares in Bovac Limited. See, first of all, at the time of gift, yes, business property relief will be available. The shares were gifted on 6th April 25. Okay. Here it was written. At that time, 2-year ownership was completed because he purchased in 2023. So yes, business property relief will be available. It will be available on business use portion. Pick up the total market value because IST works on market value, not on gain. Now, if Adele will die before 6th April 32, this gift will become chargeable for IST for death tax purpose because death is within 7 years. Now, the condition is that you must keep that asset in your ownership at least till the death of donor. Okay, so you need to ensure that the asset is in your ownership at least till the death of the donor. Otherwise, the relief will get withdrawn. And if you're selling it, you need to invest in alternative qualifying business asset like in any other business or something. There is no detail given about that. Now, okay. Now, if Adele dies before 1st March 27, which is the proposed sale date. So before 1st March 27 and after 1st March 27. Because the question is stated he will die before 6 April 32. So before 6 April 32, there are a lot of dates. The important date is 1st March 27. Now, if Adele dies after 1st March 27, just think, Adele, for example, Adele died in 2028, but Sitka will sell these shares in 27. So on the date of Adele's death, the shares will not be in her ownership. BPR will get withdrawn. But what if Adele dies in 2026 only? If Adele dies in 2026 only, then Sitka will have these shares in her ownership because she will keep it till 27. So in that case, the BPR will remain intact because Sitka will have the ownership of these shares. I believe it was an easy one, but it was all about understanding the requirement in a good way. First, getting the BPR, looking at its condition, looking at the death date, which was very much essential. Okay, looking at the death date was very much essential. And then, okay, if she sell it before the death date and if she sell it after the death date. So the sale date was 1st March 27. Okay. The expected death date is anything before 2032. So now we know the sale date, but we don't know the exact death date. We know that, okay, Adele will die before 32, but we don't know the exact death date. We know the exact sale date, which is 1st March 27. So we make it that benchmark. And then we started to argue that if Adele will die after it, then BPR will get withdrawn because on that date, Sitka will not have these shares in her ownership. Okay. And if Sitka will not have these shares in ownership and she has not invested in alternative business, then BPR will get withdrawn. But what if Adele dies before this proposed sale date? Then obviously the shares will be in ownership and BPR will remain intact. You just need to read it with patience, listen to me 2-3 times, like go back again, go back again. It will get clear. It's just about using the words. Let's look at this last requirement. The question is done. And with this exam paper will also get done. Now, explain the specific circumstances in which the maximum inheritance tax liability would arise in respect of this gift and calculate the amount of this liability. What is the situation when the inheritance tax on this gift will be maximum? So obviously the maximum will be when BPR gets withdrawn. Because if the business property relief will get withdrawn, then only there will be too much IHT on it. Because otherwise, this 368,089 is exempted from BPR. Only a very small amount will become chargeable. So what is the circumstance in which the maximum IHT will arise? Believe me, it's very easy. And we have seen such requirements in the past papers already also when we were doing topical practice. Let's look at it. So the circumstances in which the maximum IHT will arise. So the first essential circumstance is that business property relief should have been withdrawn. And business property relief will get withdrawn when Adil will die after 1st March 27, when Sitka will already have sold these shares, and on the dead date she will not have the ownership. So the BPR will get withdrawn, number one. Number two, we are talking about the maximum IHT which can arise. This previous gift of 1st July 22 also becomes chargeable so that it uses up the NRB. And it will use up the NRB, the IHT will get maximized. Let's look at it. Obviously, no one want to maximize the IHT. Everyone want to reduce it. But the question is saying that, okay, what the worst can happen? Maximum IHT which can arise on this gift of shares of Bovac Limited depends on following factors. Now, what are those factors? Let's look at it. Okay. Number one, BPR on this gift gets withdrawn. Okay. This will happen if Adil dies after Sitka have sold these shares on 1st March 2027. Okay. So if Adil dies after 1st March 27, then BPR of 368 089 will be withdrawn, as Sitka will not have these shares in her ownership on death of donor. Donor is Adil. So, because Sitka is very much clear that she will sell it on 1st March 27. So, if Adil dies after that, then the BPR will get withdrawn. Okay, because Sitka has sold the shares. For example, Adil died in June 27. So, Sitka will not have these shares in her ownership on the donor's death. Number two, previous chargeable transfer of 108,000, I believe, of 108,000 of July 22, of 108,000 of July 2022 also gets chargeable for IHT, and it uses up the nil rate band of this gift of 2025. These shares of Bovac Limited will be gifted in 2025. Okay. Now, previous chargeable transfer will become chargeable for IHT if Adil dies before July 2029, that is within 7 years of that. Just think about it. I'm building up the situation that what the worst can happen. The worst is that he dies after 1st March 27, so that the BPR is gone. After 1st March 27, but before July 29, so that the previous transfer also becomes chargeable. And another worst thing is that the taper relief is also not available. Taper relief is 0% for 3 years. After that, it starts to increase. The gift date is April 25. Okay. Taper relief will be 0% if adult dies within 3 years of gift. Okay. That is before 6th April 2028. In that case, there will be 0% taper relief. I know that you guys may have some questions in your mind, but just keep patience, I will repeat it. This means that maximum IHT may arise on this gift if adult dies between 1st March 2027 to 6th April 2028. That 1 year is the dangerous one, because if he dies after 1st March 27, if he dies after 1st March 27, the BPR is gone, because Sitka have sold the shares. The BPR is gone. That previous chargeable transfer has also become chargeable because it's before July 29. And taper relief is also 0% when he dies before 6th April 28, that is within 3 years of gift. That's the worst that can happen. Now, maximum IHT on this gift will be, okay, 404,000 was the value of transfer, 2 years annual exemption. Annual exemption of 2 years because there is no other gift done around it. 3,000. So that gives us 398,000. Okay. Annual exemption of 2 years is available as no gift in tax year of 6 April 25 and before it, because the previous gift was made in 2022. Okay. Death tax on it will be 398,000 is the value which has become chargeable. Now, your nil rate band is 325,000. Just use your mind. Your nil rate band is 325,000. 108,000 will be used by that old gift. 108,000 will be used by that old gift. So how much nil rate band will be available, and then how much value will become subject to IHT? So 325 minus 108. So the nil rate band available will be 217 minus 398. So that gives us 181,000 multiplied by 40%. I know that by now your mind must be sparkling like a bulb. Don't worry, I will repeat again. So the maximum IHT which can arise on this gift will be of 72,400 pounds. Okay. Sir, will you repeat it again? Yes, I will repeat it again. Okay. But first, let me close this question that it's all done. Now, see, explain the specific circumstances in which the maximum IHT would arise. See, just start to think about it. No one wants the maximum IHT, but we are thinking about the worst that can happen. That what worst can happen in this situation, like what is the worst hit he will have to take. So the worst thing is that the BPR gets withdrawn. That will happen if adult dies after 1st March 27. Okay, that will be the worst thing that can happen, because Sitka must have sold the shares, and if she has not reinvested, as there is no indication in the question, the BPR will get withdrawn. That old transfer of July 22 also becomes chargeable, and it uses up the nil rate band as it used here. And taper relief also falls to 0% if adult dies within 3 years of gift. The gift date is April 25, so 3 years is 6th April 28. So the worst period, and Sitka should pray that please adult do not die in that period. That is after 1st March 27, but before 6 April 28. No taper relief, BPR getting withdrawn, old transfer also becomes chargeable. You adjust your annual exemptions. Okay, there is no gift in 6 April 25 year because the only gift was of 22. So the annual exemptions were available. So maximum IHT will be 398 minus the nil rate band. Now nil rate band will be used by that 108,000. So 181 into 40%, that's the maximum IST which can arise on it. Now, if I look at this entire question, believe me, only this last requirement was bit technical. Otherwise, this whole question was a real piece of cake. You can see it's over. How much the tax will reduce? That was very easy. One taxpayer was higher rate, other was basic rate. So, okay, when the rental income will shift from a higher rate taxpayer to a basic rate taxpayer, there will be a saving. In case of dividend also, there will be a saving 33.75. You are falling into 8.75 and that 0% band. Gift holdover relief, unquoted company shares. The donee is UK resident. You can refer the summary notes for these. I believe it was a very easy thing. You have already have all the summary notes and all thing. Okay. Then explain with supporting calculation the impact of gift holdover relief. It will defer the gain, but gift holdover is on gain only. IST is on the market value. Gift holdover is on the gain only. Chargeable business asset divided by total assets. Okay. You discuss the gift holdover relief. Then BPR at the time of gift, yes, BPR will be available on the business use portion. If he dies before 32, then the transfer will become chargeable for IST. Okay. Now, if Sitka will sell on 1st March 27 and Adil is alive on that date, so this means you haven't hold the shares till the death of donor. So BPR will get withdrawn. Okay. Now, what are the circumstances? The worst things, BPR getting withdrawn, previous chargeable transfer becoming chargeable, taper relief also 0%. So that's the worst that can happen. So with this complete exam paper of June 25 attempt is done. In this series of past paper discussion sessions, we'll be discussing around 7 complete attempt exam papers, which is very much essential for your exam preparation. See how the rules interact with each other. Taper relief, BPR, previous transfer becoming chargeable. At the same time, there is income tax, gift hold, everything getting mixed up. So many students just do the topical practice and they are just not able to deal with the actual examination because they have not practiced these situations. So this is my role as a teacher to teach you guys these complete exam papers. Okay. So hope to see you all in our series. We will be continuing further looking at more past papers. Your patience and concentration throughout that is appreciable. Okay. So we'll continue further in the next class with the next exam paper. If you have any query or you want to connect with me for these revision sessions and mock exams, you can always connect with me on my WhatsApp. Okay. Thank you, everyone.